Today is Thursday, December 3rd, and this is a post-market review for the stock market activities today. We had another low-volume day, the path of least resistance to the upside, and you see a slow grind higher throughout the day. And of course, these are retail participants buying the market on vaccine and stimulus optimism. However, before the closing bell, we heard some news about the vaccine from Pfizer, and that caused a lot of volatility, so we will talk about the technical implications and what to expect tomorrow and thereafter. I also have a lot of good news in the headlines of the day segment, and stick around for the charts analysis because I have 3 new options trade that I want to share with you, and I answer some viewers' questions during the segment. With that being said, here we go. The Dow Industrial Average closing in the green, 85.73 points, or a gain of 0.29%. The Nasdaq also in the green, 27.82 points, or a gain of 0.23%. The S&P 500 in the red by 2.29 points, or a decline of 0.06%. The market slid significantly lower during the last hour of the day. However, we have witnessed a rescue operation at the end, buying the dip and pushing us all the way pretty much to the flat line. And here is the sector's performance for the day. At number 1, energy, capturing the gold medal. The second place, and the silver, real estate, and the third for the bronze, consumer cyclicals. The laggards of the day, utilities, communication services, and financials. Moving on to the futures market performance, and right away we see another day, another gain for crude oil. Softs, the picture is mostly in the green. However, we have 2 exceptions in coca and cotton. And we have news regarding coca. Of course, we've been covering the coca wars between the farmers in the Ivory Coast and Ghana versus the big coca importers from the US and Europe. And the farmers are now accusing big coca such as Hershey's of circumventing the extra taxes they were supposed to pay the farmers by going directly and buying coca beans from London and New York exchanges instead. This war is likely to heat up again. Hershey's managed to buy cheap coca beans that were already shipped here and trading in the New York and London markets, but at some point they're gonna have to face the music and negotiate with the farmers in the producing countries, otherwise they're gonna have to pay the extra taxes. And the news we have about cotton is that the US is banning cotton imports from China, specifically from a region where the US intelligence agencies accuse China of having concentration camps against minorities. But we do see gains here for OJ, coffee, lumber, and sugar. Metals, we see the rebound in gold and silver continuing today, and the hot run for platinum continues, the best performer in the metals future so far. And we see a mini retreat here for copper. However, the loser of the day here is palladium, declining significantly today. However, off the lows, only down 4%. What about meats? Meats are getting slaughtered today. Live cattle, feeder cattle, lean hogs, all declining over 1%. Grains, different picture here. We see a rebound for soybeans, soybean meal, soybean oil, corn, oats rebounding big today, canola resuming the rally. However, it is a rough day for rough rice and wheat. Moving on to the big casino, the options market. What do we have here? The most active names for the day. At number 1, Apple, with 1.1 million contracts exchanging hands. Today, about 73.5% of those were calls. Tesla at number 2, 1.1 million contracts approximately, or about 69% of those were calls. And check out number 3, American Airlines, with about 1 million contracts, over 76% of those were calls. We see an uptick of options trading activities for the airlines today, Boeing and cruises, specifically Carnival Cruises. They're bidding big on an upside for the comeback stocks, aka the reopening names. What about Palantir? We see a mini rebound today, and I say mini because the name declined over 20 or 30% since the beginning of the week, and today it is rebounding over 5% or so, and we see a slight uptick here in activities for Palantir, 763,000 contracts for the day, about 72% of those were calls. And check out NIO. Nobody loves NIO anymore. They're back at the Tesla table. These gamblers chase whatever the hot name is. They have no loyalty. We see NIO trading about 740,000 contracts for the day. About 69% of those are calls. The number might look large, about 740,000 contracts, but we were seeing over 2 million contracts for NIO during the heat of the pump. So when they migrate from one table to the other, they leave the other name declining. And we talked about that situation and scenario exactly last week. The traders are going to migrate to Tesla, leaving NIO in the dust, and NIO is a stone cold short. And you saw the name declining significantly since we called that. Moving on to some interesting trades for the day. Starting with the ticker ZNGA. This is a video gaming company, and they're buying the 9 calls, expecting over 6.5% upside for this name by the expiration date of January 8th. This is a big one, costing over $250,000. We do see the ticker IEF. This is the ETF tracking the 7 to 10 years treasury bonds. Somebody is making a bearish bet here, buying the 110 puts, expiration date January 15th, with expectation that the ticker will decline over 8% by then. So they are bullish on yields, bearish on the prices of bonds. Here is an unusual one for the ticker WES, Western Midstream Partners. Not a usual name. And they're buying the 14 puts, expiration date December 18th, with expectation that the name would decline over 10.5% by then. The trade again costing about $250,000. And here is one for Royal Caribbean, or excuse me, Carnival Cruises, the ticker CCL. I told you we've seen an uptick of activities for Carnival today. And here is one, they're buying the 26 calls, expiration date next week, December 11th, with expectation that the name will rise another over 12.5 percentage points. Another unusual one for GLD, the gold ETF, and they're making a bullish bet here, buying the 181.5 calls, expiration date December 18th, with expectation that gold will rise over 5% by then. I agree with the call, and I am bullish on gold, and I did buy gold at the levels of 1800. And here you see a big one for CrowdStrike, and they're buying the 180 calls, expiration date December 18th, with expectation that the name will rally over 11% by then. Here is another unusual one at the bottom of the table, the ticker SPR, Spirit Aerosystems. And here they're buying the 45 calls, expiration date December 18th, with expectation that the name will rally over 10.5% by then. And again, this is costing close to $500,000. It is notable, we're seeing a lot of bullish bets today for Boeing and the airlines names. And here is a smart trader saying, I'm not going to chase the sexy names. I'm going to do the homework and go with SPR instead. Continuing with interesting trades, here is Boeing, but it's not what you expect. Somebody is calling a short-term top here for Boeing, buying the 220 puts, expiration date next week, December 11th, with expectation that Boeing will decline over 8% by then. Again, very pricey trade here, costing the trader over $500,000. Here is an interesting one for the ticker NIU. I don't know how you pronounce this one. NIO? It's not NIO. NIU. Anyways, it is a Chinese e-scooter company, meaning, surprise, surprise, the Robin Hoodiots love this name and wait for them to discover this name further. And somebody already getting ahead of time and buying the 35 calls, expiration date January 1st, with expectation that the name would rally over 21% by then. These are very expensive options, but again, knowing the current mentality and psychology in market participants, it is no surprise that this ticker will climb higher. This is at least what this trader is betting on. And what about SPLK? It was one of the hottest names traded today, significant uptick in volume, and the reason is the Robin Hoodiots. Why do I say that? The Robin Hoodiots have this belief that if things drop really big, they bounce really big right away. So what do? Is what they did yesterday. CRM, Salesforce, declining significantly. After reporting earnings, they stampeded and they bought upside calls way out of the money. Expiration date, tomorrow. What happened today? CRM muted. These options will expire worthless. Now, I don't know if SPLK is going to bounce tomorrow or not, but again, they stampeded, buying significant amount of out-of-the-money calls for SPLK expiration date tomorrow. Now, what if you want to bet on a rebound here for SPLK, but you don't want to do it the Hoodiot way? Here is an intelligent way to do it. The trader here is opening a calendar spread, a bullish calendar spread for the name here, buying the 170 calls, expiration date December 18th, with expectation that the name would rally over 6.5% by then. And the trader is paying about $2 for this particular trade. However, they're also selling the 170 calls, expiration date December 11th, aka next week, and they are collecting about 60 cents a piece for this one. All in all, reducing the entry cost from about $2 to about $1.40 a piece. Again, calendar spreads, calls or puts are my favorite because when I see a trader opening a calendar spread, it tells me that this trader is intelligent. They're not stupid. They're very pragmatic. They're betting for the upside, but they're not being greedy. They're not buying way out of the money calls or puts. They're defining the risk. They're lowering the entry price. These are all signs and signals of an intelligent trader. Moving on to the headlines that shaped the day. And right away, we had some economic data in the morning. And guess what? This time we had good news, not bad. The services PMI showed a reading of 58.4 versus expectations of 57.5. And the last reading for last month was 57.5. So we are improving here. And that is good news for the services sector in the economy. Manufacturing slowing down, but services picking up some steam. And what about the weekly jobless claims? They also came lighter than expected, which means good news. 712,000 claims versus 780,000 expected. However, the bad news is that 712,000 weekly jobless claims is still significantly high and very alarming for the state of the economy. And to illustrate that, we heard news from 3M, and 3M are laying off about 3% of its global workforce, about 2,900 jobs. Lots of these jobs are here in the US. Furthermore, we have Southwest talking about laying off an additional 6,800 employees, and the breakdown for these warnings were sent to 1,200 pilots, 1,500 flight attendants, and 1,110 customer service staff, and 2,500 operational staff. Now, make no mistake, the stimulus would help to save some of these jobs, but also be aware that these airlines companies figured out how to do more with less, cutting corners and cutting costs, and whether they receive the stimulus or not, they're gonna get rid of employees anyways, and they will use the stimulus money for executive bonuses.
COVID.
This is a segment, a tragic one that we try to avoid to cover every day. However, we're forced to do so because the situation is getting very, very severe and out of hand. You looked at the death numbers, which are climbing to the highest numbers ever since the beginning of the pandemic, losing almost 3,000 people per day. Meanwhile, stocks only go up. They don't care. More death equals stimulus optimism, vaccine optimism, fill in the blank optimism. But here we have LA County imposing a lockdown yesterday, being ordered to shut down and cease operations as quote unquote the city comes to a devastating tipping point. And what do we have today? California governor announced new regional stay-at-home orders. I guess they sliced the state into regional, Region 1, Region 2, etc. And they will decide how to lock down each region entirely, which will make the geographical areas larger and the shutdowns bigger. And they're also doing it to distribute the vaccine and prioritize certain regions over others based on the caseload numbers. But the most notable news, of course, came before the closing bell from Pfizer. All of a sudden, Pfizer slashed its COVID-19 vaccine rollout target after facing quote-unquote supply chain obstacles. Now, you think that the CEO of Pfizer, who dumped 60% of his stock in the company after the vaccine announcement pump, you think he wasn't aware of these quote-unquote obstacles when he sold? Of course he did. They know there is a problem here with the vaccine, whether the efficacy is not as true as they're advertising or the distribution challenges that they're not being transparent about. And of course here we have Dr. Fauci saying that the UK's approval of the Pfizer vaccine was much less deep, quote unquote, than what the US would do, meaning that we're going to review the vaccine with more scrutiny than the UK did. But rest assured, if this whole vaccine headlines scared you today and you're a little worried about that the market might slide lower, don't worry, don't sell anything even though you're drowning in profits, because to the moon, bro, and continue to put your blindfold on and buy. Because even if we have bad news about the vaccine, here comes stimulus optimism to the rescue. Because today we heard the news that U.S. House Speaker Nancy Pelosi will speak again to slimy Mnuchin to talk about the stimulus. And what do you know? By the end of the day, we heard from Mitch McConnell, who said that he had a good conversation with Pelosi. Oh, they talked. What is that? Another 300 points to the Dow? Every time they talk, we had another 300 points. Moving on to company-specific news, and let's go with the souffle, aka Tesla. And now we have the geniuses at Goldman Sachs upgrading Tesla and raising the price target by 40%, saying that Tesla will trade above $700. Remember the rule for new viewers in this channel. And the rule is, when Goldman says buy, you sell. When Goldman says sell, you buy. This has never failed in my years and years of trading. And remember when Goldman were bearish on Tesla and they downgraded the name right away, that was the beginning of the massive Tesla rally since last year. Now that the name exploded over 1,000% since then, Goldman is making a 180 and now they're upgrading and recommending the stock. What does that tell you? It's over. It's done. You start buying Tesla put options right now. And if Tesla indeed forms a top here and trades lower from this point on, we in this channel will bake a souffle and buy a sledgehammer from Home Depot, and we will send it to the genius analyst who made this call at Goldman Sachs. But that speaks to the market sentiment right now. Even Wall Street analysts are going bananas and they're upgrading stocks left and right, giving very cartoonish price targets. Here is the excess optimism indicator, and it is reading the highest reading ever, meaning the market participants have never been more optimistic about the stock market and the upside from this point on. The last reading that we had that was elevated to this level was prior to the February crash, and it was reading 57. What about preceding the January crash in 2018? This indicator read 52. What about the 2015 crash? The indicator read 52. What about the '09 crash? The indicator read 48. Where are we now? 60%. Highest ever. A lot of slaughtering about to come. This is gonna be one of the biggest, most epic corrections ever. This kind of optimism and greed and going all in, buying call options and leveraged indices, these are all indicators that market participants have gotten extremely greedy, and these market participants are not professionals or institutionals. They are the amateur moron retail trader who invaded the market right after the March bottom. Why is this dangerous, by the way? Because any panic will be snowballed in effect, meaning that all of these entrants to the market from the retail side who are looking for a quick profit in the short term, if the market starts to roll down significantly, they will all panic and rush to the exit door at the same time. You can't fit them all at the exit door, through the exit door, and that amplifies the strength and the severity of the correction. And by the way, if you think that I'm just a dumb YouTuber, what do I know talking about the correction? Here is Wall Street sweetheart, aka Pizza Boy, Mike Wilson from Morgan Stanley, Wall Street's top analyst. And Mike Wilson says that the US stocks are overbought and at the risk of a correction. Now, remember that Mike Wilson called the market quote-unquote overcooked just a few weeks ago. Now, I talked about Tom Lee from Neptune, and I exposed Tom Lee for the fraud that he is. All what Tom Lee does is he goes and studies the history, figures out which probability has the better side, and he issues his predictions likewise. For example, historically speaking, the market usually rallies by year end, aka the Santa Claus rally. What does Tom Lee do? He goes on every year predicting a Santa Claus rally. If it happens, all of a sudden Tom Lee is touted by the media as the Messiah and the all-knowing, and he got it right. Meanwhile, the probabilities were already over 70% that we will witness a Santa rally, whether Tom Lee calls it or not. Mike Wilson plays a little more sophisticated of a scam. He goes every year and every period of the market after a significant rally, and he says, oh, we're about to see a 10% correction. Now, what happens after impulsive rallies in a short period of time? Usually, historically speaking, you see a correction of about 10% or so right away. And Mike Wilson figures, hey, I'll just predict a 10% correction after any significant rally. Matter of fact, every single year, because intra-year, we usually have about 10% or so correction every single year. These are the probabilities. Mike Wilson figures, hey, I'll call a 10% downside either way. If it happens, it happens. If it doesn't, I'll just keep saying, wait for it, wait for it, wait for it until it happens, and then they'll take my word as the gospel. And by the way, right before the elections, Mike Wilson predicted a 10% decline in the stock market. Here was what happened. The stock market indeed declined 7.5%. And right after that, the market rallied higher all the way where we are right now, over 15%. So what do you say? Should we give Mike Wilson credit here? Is 7.5% close enough to 10? Was he talking about that when he said near term, or is he talking about something else coming later? Because if the market rallies from this point on and never look back, Mike Wilson would say, yeah, I predicted a 10% correction and the market slid 7.5% after that, so close enough, come on. However, if we decline from this point on and we see a market crash, Mike Wilson would come out and say, oh yeah, this is the one I was talking about when I said 10% in the near term. The 7.5, that doesn't count. And near term is it's a fluid situation, you know. It could be 2 days from now, it could be 3 months from now, 4 months from now. It depends on when my quote-unquote prediction becomes true. Then that would be the quote-unquote near term. And speaking of fraudsters, let's talk about one of our favorite, Jim Cramer. Jim Cramer, in his program yesterday, revealed his rotation trade, picking some reopening names, suggesting that you buy these names as the reopening trade. Now remember, we called the rotation trade 3 months ago, more than 3 months ago. Actually, in the beginning of August, the rotation trade is already playing 3 months now. Some names already rallied 100%. And now, Jim Cramer is recommending and issuing his rotation trade names. So should you listen to Jim Cramer and buy these names now? You could do that, or you could follow his advice from yesterday when he said that the stay-at-home investing trend is not over yet, recommending that you continue to buy the stay-at-home names. And if that confused you, maybe you should listen to Jim Cramer number 3, who just a day before that said that, FANG stocks are not going anywhere anytime soon, even during the rotation. Meanwhile, also Jim Cramer said yesterday that high-flying cloud stocks are in a bubble. So which Jim Cramer should you listen to? 1 or 2? 3 or 4. I feel like an optometrist, but I'll pass on Jim Cramer number 1, number 2, number 3, and number 4, and I will go for a tall stack of pancakes. Flip 'em good. Moving on to the heat map analysis, and what we have here. Muted day across the board, but we have significant winners and losers. Starting with the tech sector. Right away, the big boxes of Apple and Microsoft are muted, but you do see significant winners here in the software names. Right away, Square rebounding from big declines last few days. Okta rallying over 5% after announcing their own earnings. CrowdStrike up double digits today. Paycom, The Trade Desk, Ring, DocuSign all closing in the green. The notable underperformer in the software section is Splunk, the ticker SPLK. We talked about this one, down over 23.5% for the day after announcing their earnings yesterday. What about chips? Intel outperforming yet again, up another 2% or so. Nvidia, AMD, TSM, the hot names are lagging for the day. Micron, a big winner also, been on a tear recently, up another 1% or so. But I have a feeling that Micron is reaching a top here and will start reversing from this point on. Moving on to communication services, Google muted, but Facebook down big, about 2% or so, because we have some scrutiny from the Trump administration against Facebook due to their practices, allegedly, of course, of favoring immigrant workers over American ones. We'll see what happens there. We see Spotify giving up some of the gains from yesterday, just a little bit, 1% or so. Disney, Netflix muted. Netflix more to the downside. However, the notable winner for the day here is Roku, up over 2.5% for the day. What's going on with consumer cyclicals? Amazon muted just like the rest of big tech. Alibaba rebounding about 2% or so. What about automotive? Tesla, we know the story, up another 4% due to the Goldman Sachs upgrade. But we do see NIO declining significantly, over 5%, and General Motors taking a break, down 1% or so. One of the notable decliners in this sector is International Paper, a name that I have in my portfolio, down over 3% because they're spinning off their printing paper business. At first, you'd have think that this is good news because they're getting rid of the weaker segment in their business. However, the market has the appetite for the reopening/vaccine trade. We know that their printing paper business has been the laggard, so when we reopen, and if we're trading on vaccine hopes, we like the printing paper business because it will likely recover after the reopening phase of the pandemic. Travel, the comeback stocks, whether we're talking about hotels, casinos, cruises, surging significantly higher. Residential, bouncing from the big declines from yesterday. We're talking about Toll Brothers, Lennar, D.R. Horton, all up big for the day. Apparel in the green, restaurants, similar story. But we do see declines here for eBay, down over 2% or so. What about consumer defensives? Weakness across the board, specifically from the bigger names. Unilever, another down day. Procter & Gamble. Costco, down almost 2.5%. Walmart, down. Dollar General, down. But the loser of the day is, unfortunately, another name that I own. Kroger, down over 4%. However, Kroger reported very decent earnings and their cash positioning is expanding. But again, the market is treating this name as somewhat it is a Zoom or Peloton, that after the reopening of the vaccines, the name will decline. It is a grocery store. It is not a stay-at-home play. Buffett is buying on the dips. I am buying on the dips as well. The winner of the day for consumer defensives is Tyson. Tyson on a tear, over 4.5% for the day, and Cisco another gain of over 2.5%. What about REITs? REITs are having a good day here, whether we're talking about healthcare facilities, residential REITs, even retail REITs. We see Simon Properties bouncing higher today, but American Tower giving up some of the gains from yesterday. The weakness in AMT is very notable. What about utilities? The loser of the day. NextEra Energy down, Dominion down, Duke Energy down. Hardly any notable winner for the day in the big names of utilities. What about materials? Copper in the green. Another day of gains for Freeport McMoran, up over 1% or so for the day. Gold miners taking a break, but we see a continuation of the gains in iron, nickel, platinum names. Energy, the big names of energy, ExxonMobil, Chevron muted for the day. The gains came from the smaller names such as Pioneer, Occidental, Energy Transfer, and when we visit industrials, what's going on here? The notable winner for the day, airlines, in addition to Boeing and Raytheon. However, we see pain here for Deere. We're covering the chart of Deere in a little bit, and we see Cummins, the ticker CMI, declining significantly today, over 3% or so. Healthcare, Pfizer, we know the story. The loser of the day here, down over 1.7%. But of course, Pfizer woes are to the advantage of Moderna. Moderna is up almost 10% for the day. The momentum in pharmacies continue for CVS and Walgreens. Of course, we're assuming that they're going to distribute the vaccine. They've been rallying ever since then. What about financials? Bad day for financials, muted to the red mostly. We see the big names of JP Morgan, Bank of America trading in the red. Some weakness in regional banks here, specifically from HDFC down almost 2.5%. Credit cards muted. MasterCard down, Visa down. However, American Express and PayPal outperforming today. Moving on to the rotation trade, and let's see if we have a theme here. Yes, we do, slight, but there is a theme of the comeback stocks winning the day. The momentum names, the stay-at-home names, we know the winners and what's going on there. Tesla, the gamma squeeze, DocuSign on the heels of earnings today. DocuSign been consolidating, trading slightly to the downside for a while, and now you see a pop for today and after hours after reporting earnings. But all in all, we see a muted day for the momentum names. Going across the aisle, for the comeback stocks, we see big gains here for Royal Caribbean, Six Flags, Marriott, Ulta Beauty, even though Ulta's down big after hours. And this, of course, could change tomorrow. The question is, was the flush down that we saw yesterday after the bad news from Pfizer, is this going to stick? And if it is, then we might see a rotation from these names back to the quote-unquote safety of tech and momentum. Switching to the charts analysis. And right away, we're starting with the SPY 15 minutes chart. What do we see here? Again, trading flattish, doing absolutely nothing, going back and forth. You see the big flush at the end of the day. However, that was picked up by the buy the dip crowd and they pushed the SPY, all in all closing on the flat line. The notable support remains at 364.40, and we're not covering the daily chart because there is no significant development there. We are trading at all-time highs. The sky is the limit. Moving to the Qs, 15 minutes chart. What's going on here? A slight gap higher, but trading flattish throughout the day. Similar story with all the indices. Volume is not picking up at all. It's still very low. You see a slight uptick at the end of the day when we started flushing down, and then the rescue that came thereafter. Any development today? Nothing at all. We have to see how the market would trade after hours overnight regarding the vaccine news from Pfizer. Is the market going to think that this is serious news, or it doesn't matter because we have Moderna and AstraZeneca? So even if we have delays from Pfizer, who cares? And if we do have delays, who cares too? Because we will rally on stimulus optimism instead. Here is the dollar index daily chart, and the meltdown continues. This meltdown will accelerate significantly if we don't see a rescue operation for the dollar index, forcing all the shorts to cover. But what a slide in the dollar index. What does that mean for gold? This is what it means for gold. Gold trading higher. We've been talking about gold trading higher before the week even started, and you see gold having a nice rebound here. Not definitive yet, but it is confirmed, and until unless we see a sign of a reversal, we are not booking the profits yet. What about yield? Here is the revival of the bull flag, yet we haven't managed to close above the top end of the pole, which comes in about 97%, 0.97%. Today we saw a decline, but there is no change for the outlook. The outlook is the psychological level of 1% remains very strong, acting as a magnet, pulling the chart higher and higher. And until unless we close below the breakup candle, which comes in or about the level of 85 basis points. Now, you cannot predict what's going on with the TNX and yields from looking at this chart, but you can do something different and look at the TLT instead to figure out how to piece out the puzzle. Here's what happens when we look at the TLT. A climb higher today, but we are seeing a reverse head and shoulder formation, suggesting that the TLT will climb higher and has an up leg coming up. What does that mean for yields and the TNX? Going lower. What about the VIX? The VIX has been very resilient. It doesn't want to close below the level of 20. If it does close below 20, you will see automatic trigger in funds to open the floodgates and flow more funds into the market, which will cause a melt up scenario in stocks. But until and unless the VIX breaks the level of 20 and closes below it, for now the VIX is building energy, being very resilient to perform a final act and rally higher, and that would come hand in hand with the much anticipated correction in the stock market. So one more rally in the VIX before closing below 20 and for the market to recover from that point. We are not covering Apple today because Apple pretty much closing flat. It did not do anything for the day, but we are covering the chart of the souffle, Tesla. What do we see? The Goldman pump pushing the stock higher, and you know what happens with the Goldman pump. You fade it. Now, Tesla's not climbing up to my target of 84 at the RSI indicator. I told you, if it hits 84, I'm shorting with both hands. That didn't happen yet, so I'm just nibbling, opening positions in Tesla puts, but I'm not buying significantly yet. I'm waiting for either the stock to reverse and give me the signal or for the RSI to reach 84, whatever comes first. However, keep in mind that if we do go to the RSI level of 84, that would mean another leg higher for Tesla. That is very plausible right now. And there is technical support for another leg to the rally in Tesla. We see an ABC formation, a potential one that could take us to an upper leg, the C leg, another rally, then we reach the RSI level of 84 and then reverse from that point on. So again, if you have a bear FOMO and you want to jump the gun, make sure that you start small buying Tesla puts because there could be another rally in hand here, the C leg of the ABC formation. Now, here are new trades that I entered for two names. Number one, AMAT, Applied Materials, the ticker AMAT. And you see that the chart is very, very extended. And I set an alarm for this chart at the RSI level of 80. And that level was hit today. Once it hit, you saw the name declining from the highs. And I placed a put options trade here, buying the 80 puts, expiration date January 2021. You can construct it however you want. If you want a shorter term, longer term, do whatever you want. But the point is that the chart is very extended and it's coming to an exhaustion level from which we should see a correction from these levels. And here is name number two, Deere. Deere is very extended again. It's showing signs and signals of weakness. You see the MACD rolling down. We have a lower divergence here in the RSI indicator showing weakness in the name. I placed a put option trade here for Deere. Expiration date also January 21st, 2021, that is. The monthly expiration, I think, at the 15th of January. And again, I'm looking for a retreat to the levels of 225. So I did buy the 240 puts, and I will probably turn this into a spread if the name goes my way and the prices of puts start to accelerate. I will sell a lower put to reduce my entry price and maximize my profits. And here are some questions that I'd like to answer from the viewers. Question number 1. Do you think after the recent rally back in JWM, Nordstrom, the KRE, regional banks, and Honda, it could be a good time to take a short position in these names if we did not follow the trade initially? Are you still heavily bearish on them short term? I'm actually not bearish on KRE, regional banks, or Honda. It doesn't have to do anything with bearishness. It's just technical trading. They're reaching strong resistance levels from which I expect the name to decline before gathering energy and rallying higher to challenge the resistance level once again. Different story for Nordstrom. Nordstrom is very extended. It gained over 100% in a very short amount of time. That name I am bearish on because it will need a bigger correction, more than just a technical one, for it to go back to a reasonable price. But here is what you do. If you haven't followed these trades, and by the way, you don't have to follow them, you could find another one, a better one on your own. But if you do want to follow them, you have to look at the levels that I gave you, the levels of resistance, and study how the chart is behaving around these levels. If they're blasting through them significantly, closing above the levels consistently, what does that tell you? That the resistance is likely defeated and the name would rally from this point on. So that means a trade that you don't want to enter. However, if you see a reversal from these levels, a retest, a rejection, a trend lower, then that is your confirmation here that it is time to follow the trade, and the name, in this case, let's say the KRE, will trend lower. And if we look at the chart, here is the level that I have identified of 49.5. Now the name initially faced strong resistance and decline. However, you saw a gap higher, an overnight bomb, turning the level of 49.5 into support from resistance. However, you see another reversal, closing below it, another struggle. The name managed to close above the level today. However, it is not definitive yet. Am I adding to the position? Not yet. I'm just watching here. If I see the KRE having another big green day tomorrow, then that is your signal that the resistance has been defeated. You should nip it in the bud, get out of the trade. But if we see another slide lower, and pay attention here because the TNX went lower today, the Treasury yields, the control regional banks went lower today, and the TLT is showing a reverse head and shoulder formation, which will likely result in an upside trend, meaning a downside for yields, meaning a downside for the KRE. You see how you piece the puzzle from different charts, different pieces of information, you put them together, and now you have a better picture that at least the theory is right, that the KRE should decline. Whether the timing is right or wrong, that you wouldn't know and you have to wait and see. But again, if I see a decline from these levels tomorrow or rejection, then I will add to the trade. So you have to watch these levels that I gave you for every name and see how they behave around them. If they blast higher, surpassing the resistance, that is your answer. This was not a good trade. If we see a peak higher, then a reversal or another rejection and a slide lower, that is your confirmation right there that the trade was good and you should add to it. And here is another question from a viewer, and I'm summarizing here. The question basically says, can you hedge if you are short? So the trader is either buying put options or has short positions and asking if there is a way to insure against losses. Yes, there is. Take, for example, I have short positions in Apple and DocuSign. During the weekend, I told you that Apple is showing bullish technical trends and it will likely trade higher this upcoming week, meaning this week. And indeed, you did see Apple trading higher, up about 6% or so. So what did I do last week when I saw these signals? I bought call options for Apple. Now, yes, my short position is down 6% because the stock is up 6%. However, my options, the insurance, the call options that I bought as a hedge against the short position are up over 300%. So now not only you make up for your losses, but you also capture a profit. So if you are short, you buy call options as a hedge. If you are long, It's a similar story. You buy put options as a hedge. Today we had DocuSign earnings. I have a short against DocuSign. I know that they're going to report earnings this upcoming week. So what did I do? Buying call options for DocuSign. Yes, the short position is losing. However, your call options are making up for the losses and then some. Now, your question went more into put options. What do you do if you have put options? Can you hedge against that? You can't hedge against it the way you can hedge from a stock position, because the whole point of options trading is taking risk. You can lower your risk. You cannot hedge technically, but you can lower your risk, and that comes to the importance of the construction of trades. Me and you can enter the same trade, meaning, I'm just giving a hypothetical example here, that we are bearish on Boeing and we are looking for next week expiration date, the strike price 300. Doesn't matter what price it is. I'm just giving an example here. I construct the trade one way, you constructed another one, but we are both buying the same put, the 300 put. You buy a straight put, naked put, and I instead turn it into a calendar spread or a debit spread, and I lower my entry cost. What do you know? Boeing blasts higher next week, and both of these options going to expire worthless. However, I lowered my entry cost and my risk, while you who bought the naked put option lost it all. So you cannot technically hedge if you have put options or call options, doesn't matter. But you can de-risk by being clever with the construction of your trades. Moving on to conclude this video. Very muted, boring activities so far for the week. Slight overperformance for the Qs and the Nasdaq. Slight underperformance for small caps. But tomorrow is a decisive day because we have the big jobs report and the algos will be programmed first thing in the morning to react to whatever the jobs report produces. We had two teasers. Number one, the ADP report, which came in very light for the private sector, which means it is a very large warning signal here. However, the weekly claims that we had today is showing that we are slowing down the pace of claims. So we have conflicting information here, and the jobs report tomorrow will settle the matter once and for all. But we're also looking for the market's reaction from the delays in the Pfizer vaccine. Was the slide lower, the impulsive slide lower during the last hour of the day, just a knee-jerk reaction and the market is going to trade higher from here, or is it going to stick? So two things to watch out for tomorrow, first thing in the morning. The jobs report and the market's reaction from the delays in the Pfizer vaccine. That's all I got for you today. I'll talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.